Boy, this is confusing. Biden's economy definitely needs some explaining. You have the stock market at all-time highs. You have fantastic news, hiring surges, past expectations, core inflation dropped more than expected. So you look at those things and yeah, wow, those are good. Past expectations, inflation dropping, stock market, all-time highs. And then you see poll, 20-point deficit on handling economy highlights Biden's struggles against Trump. Wait, a 20-point deficit on the economy? Inflation is coming down. Jobs are growing. As we just saw, those things are true. Despite those statistics, Trump holds a 22-point advantage over Biden on the question of which candidate would do a better job handling the economy, with 55% picking Trump and 33% choosing Biden. Think about that. Only 33% pick Biden in terms of who's going to handle the economy the best. Yeah, we were just looking at stock market all-time highs, job surging, inflation coming down. But yeah, only 33% say that Biden is the man to handle the economy. What is going on? Well, we start to get some insight into things when you see that the average credit card balance jumps 10% to a record $63.60 and more consumers fall behind on payments. Credit card delinquencies surged more than 50% in 2023. Serious delinquencies of those 90 days or more past due reached the highest level since 2009. So now we're getting some insight into how can there be such an apparent disconnect between these economic numbers and then what people are saying about Biden via those polls. And then we look at the credit card data and we see and notice some interesting things. That being, not only are the balances the biggest, but the delinquencies are at high levels. Now, credit card balances as a whole, not terrible because you can always pay those off and you don't have to pay interest. But to carry a balance, which apparently a lot of people are doing, that's a nasty situation. That's not going to feel very good when you are carrying a balance and having to pay 15, 20, 25% interest on those credit cards. If you're not aware, credit cards by far the highest form of debt you can take on. But the bigger issue here is now those delinquencies, meaning, yeah, I have this credit card balance and I just can't pay it. Like, I am delinquent. I am falling behind. And those are at the highest peak since 2009. So, does it seem like the consumer is actually doing very well? Does it seem like the people on Main Street is doing very well? It does not. People that are doing well don't carry credit card balances. People that are doing well definitely aren't going to be delinquent on their payments. So the issue here is what I talked about in this video that I've done several months ago. And you might be saying at this point, Clay, why don't you just say things cost too much? It's a cost of living crisis. That's why people are upset. Things just cost so much. And you know what? You're right. You're absolutely right. But that is the whole disconnect. And especially in regards to inflation. Because most people look at inflation and they say, oh, that's prices. And that's completely false. So if you think that inflation rises, meaning prices rise, that's incorrect. Now I understand why you would think that, but that's not quite correct. But let me let an actual expert explain what's going on. Now, I don't want you to have to watch this whole video because this expert summarizes the video in just a couple sentences. He says consumers are just spending more. And like we just discussed, yeah, that's probably what you may have already been thinking. It's a cost of living. Costs are higher, so by default, people are just spending more money. You're right, fair enough. Even though the inflation rate is down, that doesn't mean prices are coming down. And the key word here is rate. And this is what so many people do not understand, and that's totally fine because not everybody's an economic nerd like I am. But rate. So throw rate aside and let's just replace that with speed. So inflation, speed. The speed of what? Well, prices. So in other words, if the speed is coming down, what does that mean? That just means that prices are still going up, just not as fast. The speed is lowering, but it's still moving. They're still moving in the upwards direction. And the goal has always been, we want to get the inflation, and a lot of times they don't throw the word rate in there, but they should. But the goal is to get inflation rate down to 2%, meaning they only want prices to go at the speed of 2%. So prices are not coming down. They're just getting a little slower. And as the article says, prices are still rising, albeit at a slower pace than they had been before. So a slower pace. Prices are still going up, just not as fast as what they once were. And therein lies the problem. That is where you get this disconnect from. Yeah, you have all these headlines, some of the headlines including, oh, inflation is going down. Well, yeah, it's slowing down, but it's still happening. And when you have the prices still going up, well then yes, people are going to spend more. And when people are spending more, they're going to feel more of a burden on those credit cards. And now the burden is reaching the point, going back to the statistics, from 2009, highest level since 2009 of those delinquencies. And if you don't remember economic history, 2009, things got a bit spicy in the downwards direction. So I'm not necessarily saying that's what's going to happen immediately, but I'm just trying to explain that's why things can be so confusing. You look at the headlines, stock market, everything seems from that standpoint so good, but when you peel back and look at these layers, you can see why people just don't think Biden is doing a good job. And I'm not here to tell you whether or not you think he's doing a good job. That's up for you to decide, and you can by all means let me know down below. But that is why things are confusing. Seems to be two polar opposites, but at the core, the problem is the problem actually getting fixed? And that is inflation. I would argue, and Mr. Biden, if you happen to watch this, we want some deflation in our lives. I know, some of the economic people, deflation is the worst thing ever. I don't know. Ask the people that are paying these higher prices. Ask them, would you like lower prices? Because that's what deflation is now, now the speed is increasing, but in what direction? It's literally the speed at which prices are going down. Right now, it's all focused on the speed at which prices go up. But I think some deflation would be a good thing. And I know that's like a cuss word in some economic circles, but I've never met anybody that doesn't enjoy a lower price. So just something that I think would offer up a solution, because I understand, it's always annoying when people start to throw out problems, but they never offer any solution. So I don't want to be that person. I have now given a solution. So yes, let's get some deflation. Let's get some policies in place that create prices to actually fall, to deflate. And I think that would be a good thing. So I hope this helps clarify what, in my mind, is a very confusing economy out there, especially if you're not, like I said, economic nerd like me. But it's all about that disconnect. Yeah, you have those things going on, but it's those prices. It's the cost of living that not only is not going down, it's still going up just a little slower, which, yeah, that's going to be a problem. That's going to make people upset. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.